Welcome to Facts Not Forecast, your daily edge in the stock market, facts, insights, and opportunities you won't hear anywhere else. Today, we're going to pull back the curtain on, well, a pretty surprising transformation, actually. For years, Dell was, synonymous with the reliable PC on your desk. Solid, dependable. But what if I told you that same company is now quietly, yet really aggressively, laying the very foundation for the entire AI revolution? We'll deep dive into their Q2 FY26 earnings, Dell's strategic chess moves in AI, and why this unexpected pivot could redefine their future and perhaps your investment thesis.
That's right. Our mission today is really to cut through all the noise, and reveal how Dell is strategically positioning itself. It's not just as a hardware vendor anymore. They're aiming to be a critical backbone provider for this whole AI era. And we'll look directly at the latest data. Their Q2 FY26 financial results just came out. We need to understand the underlying trends and, most importantly, what these facts truly imply for the future.
Okay, let's unpack this then. My initial thought, and I think this is true for a lot of people, it leans towards Dell and, well, laptops, right? PCs. But the sources we've looked at paint a dramatically different picture. They position Dell as a major player in the AI infrastructure world. So beyond the personal computer, what exactly is Dell's expanding role here? How are they becoming so central to AI?
Well, what's truly fascinating here, I think, is that Dell is heavily expanding into AI servers and data center infrastructure. But their focus isn't really on manufacturing the cutting-edge GPUs themselves, like Nvidia. Instead, they're primarily supplying the foundational infrastructure for AI. Think of it like this. They're building the superhighways, the power grids, all the necessary supporting structures for AI. They're not just building the high-performance cars that drive on those highways. They're enabling the whole boom from the ground up.
Okay, that comparison really clarifies their position. It makes a lot of sense. So what specific details from their recent activity highlight just how deeply they've committed to this infrastructure role?
The numbers, well, they speak volumes. Dell has already shipped an incredible $10 billion of AI solutions just in the first half of fiscal year 2026. Now, to put that in perspective, that's more than their entire AI shipments for all of fiscal year 2025.
Wow, the whole year's worth in just half a year.
Exactly. And this massive increase has led them to significantly raise their AI server shipment guidance for the full FY26. They're now projecting $20 billion. And Dell wasn't just sitting back. They were actually the first in the world to ship Nvidia's cutting-edge GB300 NVL72 solution. That went to CoreWeave back in July. And for those maybe not familiar, this is NVIDIA's big, liquid-cooled, massively scaled AI platform.
Right, the top-tier stuff.
Top tier. It shows Dell's rapid deployment capability right at the forefront of AI hardware innovation.
Their agility here is pretty remarkable, but is this just a momentary surge, a flash in the pan, or is there sustained demand filling their pipeline?
It really appears to be sustained. Their AI-optimized server pipeline, it continues to grow sequentially. They're showing double-digit growth across enterprise and sovereign opportunities, and critically, it remains multiples of our backlog. So that indicates robust, ongoing demand that's, well, it's far from slowing down.
Okay, so the demand is there.
And beyond just shipping boxes, Dell isn't just a reseller here. They're innovating aggressively. They're launching new PowerEdge servers equipped with NVIDIA's latest Blackwell GPUs. And alongside that, their Dell AI data platform, which is designed to streamline and automate data preparation, a huge bottleneck in AI. And for those needing large-scale AI deployments, they're delivering fully integrated, scalable rack systems, the IR series. These support diverse cooling, processor options from Intel and AMD, advanced AI fabrics. Essentially, they're providing a complete kind of plug-and-play solution for these massive AI compute challenges.
That's a really powerful picture of Dell's AI ambition. It's quite comprehensive. But for you, our listeners, the critical question is always, show me the money.
Right. How is all this AI momentum actually translating to their bottom line? Their Q2 FY26 results just landed on August 28, 2025. What do those numbers tell us about the strategic pivot's financial impact?
Yeah, this raises that important question about how the AI momentum translates directly to the bottom line. Looking at their Q2 FY26 results compared to Q2 FY25, Dell posted record revenue, $29.8 billion. That's a strong 19% increase year over year.
19%. That's significant growth for a company this size.
It really is. Operating income was $1.8 billion, up 27% year over year.
Yeah.
And their non-GAAP operating income, which often gives a clearer picture of core business performance by excluding certain items, hit $2.3 billion, still up a robust 10%. Diluted EPS saw a substantial jump, 38% to $1.70, and non-GAAP diluted EPS reached a record $2.32, up 19%.
And cash flow, that's always key. Cash flow from operations also significantly increased. By 90% year over year, it reached $2.5 billion. That's the kind of number, that could make even the most skeptical investor pay attention.
Absolutely. Those headline numbers are certainly grabbing attention, big increases across the board. But when we drill down a bit, are there any nuances beneath the surface? Which segments truly propelled this growth, and were there any areas that perhaps didn't pull their weight quite as much?
Yeah, good question. The Infrastructure Solutions Group, or ISG, that's where Dell's servers, storage, and networking business lives, that was the clear standout. It achieved record revenue of $16.8 billion, up a remarkable 44% year over year.
44%. Whoa.
Within ISG, servers and networking revenue was particularly impressive. It hit $12.9 billion. That's a massive 69% increase. ISG's operating income also grew by 14%. And for shareholders, Dell returned a significant $1.3 billion in Q2 through share repurchases and dividends.
Okay, so ISG is clearly the engine right now.
Definitely. However, it wasn't all green lights across the board. Storage revenue, part of ISG, was actually down 3% in Q2. And the Client Solutions Group, or CSG, that's their PC business, saw much more modest growth, up only 1% year over year overall. If you break that down further, commercial CSG revenue was up 2%, but consumer revenue actually declined by 7%.
The consumer side is dragging a bit.
Yeah, and CSG operating income was also down slightly by 2% year over year to $803 million.
I see, so a clear divergence there. Enterprise AI solutions powering that massive growth, while consumer PCs show some weakness. And I noticed that gross margin rate decreased from 21.4% down to 18.3%. That's quite a drop.
It is. And management attributed that primarily to the mix shift towards these AI servers, which currently have lower margins than some other areas.
That's a classic growth versus profitability dynamic, isn't it? Chasing the hot market sometimes impacts margins initially.
Exactly. But they do expect AI margin rates to improve in the second half of the year. That's crucial to watch, of course. As for guidance, looking forward for the full fiscal year 2026, Dell projects revenue between $105.0 billion and $109.0 billion. The midpoint there is $107.0 billion, representing about a 12% increase year over year. Non-GAAP diluted EPS is projected at $9.55 at the midpoint, which is up 17% year over year.
Okay, so still strong full-year growth expected. What about the next quarter, Q3?
For Q3 FY26 specifically, revenue is expected between $26.5 billion and $27.5 billion. And non-GAAP diluted EPS is guided at $2.45 at the midpoint. They also anticipate ISG revenue growth in the mid to high 20s for the full year FY26. They see storage kind of flattening out for the year and CSG growing in the low to mid-single digits. So, yes, while AI is definitely driving the top line, they seem to be expecting some balance to return to the rest of the business as the year progresses.
Right. Now, the tech world is notoriously crowded. I mean, it's fierce competition everywhere. When we look at players like Nvidia for the chips, Supermicro focusing on servers, and then the big enterprise players like HP or Lenovo, how does Dell truly differentiate itself in this intense competitive landscape, especially when it comes to capturing this AI opportunity? Is their long-standing presence enough, or is there a deeper competitive advantage at play here?
Well, if we connect this to the bigger picture, Dell really carves out its niche through a combination of factors. It's about broad integration, deep established customer relationships, and a truly comprehensive portfolio. What's quite insightful here, I think, is that Dell's longstanding dominance in foundational areas, things like mainstream servers by 86 architectures, it isn't just about market share numbers. It means they have unparalleled access and integration points into the very data centers that will need to power AI.
Oh, so they're already inside the building, so to speak.
Exactly. They're not just selling new AI hardware into a vacuum. They're often upgrading existing ecosystems they already manage. They're essentially future-proofing enterprise IT for AI adoption, which gives them an inherent advantage over, say, pure-play AI newcomers who have to build those relationships from scratch.
So it's not just about being first with a product, but about being deeply embedded with the customer. And even in the PC market, which many consider, mature or even declining, they're not just holding on. You mentioned they're leading in specific high-value niches.
That's right. Dell doesn't just hold strong positions. They often dominate foundational enterprise infrastructure. They're number one in critical areas like mainstream servers by 86 servers and significantly AI-centric storage. That last one proves they're a go-to provider for the underlying hardware that makes AI possible at scale. And even in the PC market, yes, they're leading the charge in commercial AI PCs for the last 12 months. They're #1 in North America commercial PCs, PC workstations, and even high-end PC gaming. This shows they're not abandoning profitable segments, but rather innovating within them, linking them to the AI story where possible.
That's a lot of #1 spots. It paints a picture of broad strength. How did he specifically stack up against those big names you mentioned earlier, the specialists like Nvidia and Supermicro, and the other generalists like HP and Lenovo?
Okay, let's take them one by one. Against Nvidia, Dell is a crucial partner, not really a direct competitor for the GPUs themselves. They are integrating Nvidia's latest technologies, like that GB300 NVL72 we mentioned, the RTX Pro 6000 GPUs, Spectrum X Ethernet, Quantum X800 InfiniBand directly into their server and data center solutions. They are essentially the vehicle for Nvidia's power, bringing these cutting-edge components to enterprise customers efficiently and at scale.
So a symbiotic relationship there. What about Supermicro? They're both big in servers.
Yes, Supermicro is a direct server competitor. Interestingly, one source snippet we saw directly mentioned Dell winning the zero-sum game v Supermicro. Now, that's just one snippet, but
Yeah.
Dell itself highlights its competitive edge coming from its speed of innovation, its extensive services capabilities, the ability to offer financing for these large AI data centers, which is a significant differentiator. That's a big capital outlay, efficient deployment and installation, and its robust partner ecosystem.
That financing piece sounds like a real advantage for big projects.
It can be, absolutely. Then compared to HP or Lenovo, Dell maintains strong leadership in those more profitable segments of the PC market we talk about, commercial, workstations, high-end gaming. And they're rapidly building out their AI PC portfolio, offering choice across Intel, AMD, and Qualcomm processors, along with their Dell Pro AI Studio toolkit. They're really pushing the message that they're not just selling hardware, they're providing comprehensive integrated solutions across the board.
Okay, given all this transformation and their market positioning, what's the argument for investors considering Dell right now? Beyond the raw numbers we discussed, what is Dell's narrative for long-term value creation in this AI-dominated future? What makes it potentially stand out from its peers in an investment portfolio?
Yeah, this raises that important question about valuation and future growth prospects. As of August 28, 2025, looking at analyst sentiment, the average target price was around $146.60 for Dell. The median was $145 for the high of $180 against the current price then of about $134.05. The average recommendation from 27 analysts was overweight, with a strong consensus leaning towards buy or overweight ratings. And Dell's forward PE ratio stood at 12.28. Now, that could be seen as quite attractive, maybe even undervalued, when you compare it to some other high-flying peers in the tech space, especially given this AI momentum.
So, potentially undervalued stock according to some metrics with strong analyst sentiment behind it. But beyond just the current price, what about their foundational business advantages and the long-term trajectory? You mentioned relationships and scale.
It's exactly. Dell's own investment thesis highlights an unmatched global services footprint and what they call the industry's largest go-to-market engine. This massive direct sales force and their robust channel program can enable those deep customer relationships we talked about. And that gives them invaluable insights into enterprise needs, insights that are crucial for tailoring these complex AI solutions. And again, that ability to offer financing for large-scale AI data centers is a significant competitive advantage, differentiating them from many smaller players who simply can't provide that kind of capital support.
And the overall market growth for AI.
The market itself is a huge tailwind. The AI hardware and services total addressable market, the TAM, is projected to grow significantly, from an estimated $184 billion in 2024 to an impressive $356 billion by 2028. That's an 18% compound annual growth rate, or CAGR. Dell is clearly capturing a substantial portion of this growth, as we saw from their raised AI server shipment guidance, that $20 billion target for FY26.
And their own financial targets reflect this ambition.
They do. From a long-term financial model perspective, Dell aims for 3–4% overall revenue growth, but 8% plus diluted EPS growth, suggesting operating leverage. They're aiming for over 100% net income to adjusted free cash flow conversion, which is very strong, and they target returning over 80% of that adjusted FCF to shareholders. Plus, notably, they raised their annual dividend by about 18% to $2.10 per share for FY26. So there's a return of capital story here, too.
It's definitely a compelling growth story, particularly around AI infrastructure. Seems like they're firing on several cylinders. However, every investment has its headwinds, its challenges. What are the key risks that investors should be mindful of when looking at Dell? What could potentially derail this narrative?
Right, this encourages some critical thinking. While Dell's growth story, particularly in AI, is really compelling, we absolutely must consider the potential pitfalls. One key risk is that margin pressure we touched on earlier. The significant shift towards AI servers, while driving that impressive revenue growth, has definitely impacted gross margin rates in the short term. Remember, Q2 FY26 gross margin rate was 18.3%, down from 21.4% the year before. Now, management expects those AI margin rates to improve in the second half, but this is a factor that needs really careful monitoring. Sustained lower margins could impact overall profitability, even if revenue is booming.
That makes perfect sense, a classic trade-off. And given their reliance on cutting-edge components for these AI solutions, what about their relationships with key technology partners? Is there any risk lurking there?
Absolutely, that's another important one. Dell's burgeoning AI server business is deeply integrated with partners like Nvidia. This reliance means that any disruptions or significant changes in these crucial relationships, or maybe issues with the supply chain for high-demand components like the latest GPUs, any of that could significantly impact Dell's ability to execute its ambitious AI strategy. It's sort of a double-edged sword, right? Partnership drives growth, but it also introduces a level of dependence that needs to be managed very carefully.
Right, supply chain and partnerships are always critical in hardware. And finally, there's always market perception. Despite all this innovation, does the public or the market perception of Dell still present a risk factor?
I think it could. Despite their significant advancements in AI infrastructure and that growth in commercial AI PCs, Dell still has that consumer PC segment where revenue was actually declining, remember, down 7% in Q2 FY26. This lingering market perception as primarily an old PC company could potentially lead some investors to overlook or maybe underestimate their profound AI-driven transformation. This could possibly lead to a valuation discount compared to what they might otherwise command. And one final point. It's worth noting some insider transactions. Multiple directors and executives, including Michael Dell himself, engaged in significant sale and proposed sale transactions of shares in the months leading up to and after the Q2 FY26 earnings. For example, Michael Dell sold 10 million shares back in June 2025 for about $1.2 billion.
Significant sales.
Yeah. Now, this isn't necessarily a negative signal. Insiders often diversify for personal reasons, estate planning, lots of things. But it is a data point investors should certainly consider when assessing, conviction from leadership.
What an insightful deep dive into Dell's evolving role in the tech landscape. Seriously fascinating, from their impressive Q2 results, really driven by those AI servers, to their strategic positioning against competitors. It's clear there's much more to Dell than maybe meets the eye initially. They're not just building computers anymore. Seems like they're genuinely building a big part of the future of AI.
Absolutely. The transformation from what many saw as a traditional hardware company to a critical provider of AI infrastructure is, well, it's a powerful narrative. But it also highlights the complex interplay of innovation, market dynamics, and sheer financial execution. It's really a testament to their ability to adapt and, frankly, lead in a new direction.
So for you, our listener, the big takeaway here is Dell's aggressive push into AI infrastructure. They're not just acting as a reseller, they're positioning themselves as an architect of complex, integrated solutions. They've really found their critical niche in powering the AI backbone.
Indeed. And maybe something to think about is what Dell's rapid adaptation in AI infrastructure means for the other traditional tech giants. How might this reshape future partnerships, competition, maybe even M&A in the broader AI ecosystem? It's definitely a fascinating area to watch, and these Q2 results give us a really clear view of a company truly in motion.
Appreciate you tuning in. Until next time, stay sharp, stay patient, and let the market work for you.